Hey traders, this is Blake Morrow with Traders Summit, and it's been a while, but I have Mr. Richard Matthews from Pardus FX. How are you?
I'm very well, Blake, and it has been a while. And wow, what has happened since we last spoke? I think the last time we spoke, I had a Christmas hat on or something. We were discussing Christmas parties.
Yeah,
And
we did a holiday special, and if any of you listened to those we did a series about on the trading floor with Dick Matthews, and it was the fun series to do. But it's been over a half of a year, and the world has gone upside down and turned on its head. So, how do you? Well, yeah, it has. Let's discuss really quick. How do you feel about the current market and where we're at with? Well, let's start off with the currency market. We should obviously start there based on your knowledge. But here we have the dollar rallying to multi-decade highs. How do you feel about the dollar at these levels? Should you be a buyer? Or do you think there might be some of the gas might come out of the tank? What do you think there, Dick?
they always say buy dollars, wear diamonds, and certainly right for the last 6 months, isn't it?
Yeah.
So, it. I can't see how you can short the dollar. I just can't see how you can short it. I'm not sure I'd buy it up here, but I certainly wouldn't want to be short of it. And if you look at the situation in the world with Ukraine, which isn't really in the headlines quite as much as it was, but Putin's going to squeeze. He's going to squeeze oil. He's going to keep on squeezing till the pips hurt. And he's got the power to do that. And your previous president, the lovely Donald Trump, one of the few things that he said was correct, when he had a go at Germany about their dependence on Russia for energy. And they laughed at him. There's a video of them, of some of the politicians laughing at him when he said it. Boy, are they not laughing now. I mean,
Right.
I saw an article this afternoon. They're talking about stop using gas, start burning wood. It's really just like, they have a real big problem. And in a lesser extent, the UK does as well. The sanctions are going to push us into a recession. And to me, the only central bank that's acting with any sense of responsibility is the Fed. And I think they're still behind the curve. But I think you could see 1%. Is it next week, the next Fed meeting, I think?
Yeah, it is. It is actually next week, I believe. It's
next week, yeah. I wouldn't be too surprised if you saw 1% there. And I think they're just going to hit on inflation until it stops. Yields high. The yield on the dollar is better than anywhere else. You've got always the flight to safety element with the dollar. I just can't see that you can buy anything else.
And just for clarification, July 27th, it's in about 2 weeks. We're going to have the Fed, the next Fed meeting. So Dick, you can't buy dollars here because it's a little maybe overbought, but you really don't want to sell dollars. Is there anything that the ECB can do at this stage? I mean, I know you've got between what's happening with Germany, but trying to accommodate for this rise in inflation that the Eurozone has. I mean, and not just Germany. I mean, there's so many other European countries that are being affected. What do you think the ECB can do, or are their hands tied here?
Well, they've got to raise rates. They're importing inflation with the euro hovering around parity if it doesn't dip below parity. So importing inflation into the Eurozone. They've got their heads in the sand. I was reading today that they're saying it's not a euro problem, it's a dollar problem. Well, actually, you should look at the crosses because sterling strengthened against the euro this week. So it is actually a euro problem. I'm not sure that they can raise rates because they're so close to recession. And you've got the classic stagflation scenario. They raise rates, they push themselves into recession. They don't raise rates, the inflation runs away with it. I think they will bite the bullet and raise rates, but it's a real mess. And they've also got this problem with the spread on sovereign bonds. The difference between Italian BCPs and bunds and whatever, and I think that's going to be exacerbated. And how can you have a policy, well, I've always said that I'm very anti the euro, as you know, but how you can have a policy that suits Germany at this time and suits Italy and Spain, and they've all got different inflation rates, and they're all being hit differently by the sanctions. I think they've got a real difficult choice, but they will not raise them as aggressively as the Fed does. And so, on that basis, follow where the interest rate is, still buy the dollar, sell the euro.
Yeah, and so you do you have an ultimate target of where you think the euro is going to be? I mean, obviously we traded down to parity, not only just today, but this week we've reached it a couple of times. Do you think ultimately the euro is going to be dropping through parity and closer towards 90 cents?
Yeah, I think so. Yeah, my initial target would be 96.
Wow.
I mean, it's just Blake, you're a trader, I'm a trader. You see something around parity, what are you going to do? You're going to low ticket and you're going to push it to. There must be some mammoth old stops around there.
I'm sure, and I from what I'm gathering, then what you're thinking is you need to sell rallies. The breakdown point was at 103.30. If we can get anywhere close to that, you'd be a seller, I'm assuming.
Yeah,
okay.
I think so.
Okay, well let's shift gears to your home country and let's talk a little bit about the sterling. So Boris Johnson and his hair, they're out the door. Who's going to replace and how do you trade the sterling as a result?
Who's going to replace him? Is it possible to replace him?
That's a good point. That is a good point.
Sure. I don't think Sunak will. I think Sunak is seen within the country as a snake. He's seen as the one who's backstabbed Boris. And whether you like Boris or not, we don't like that as a nation, that sort of behaviour. So I think he's burnt his boats. The whole point that he had his website for his campaign up and running last December is a bit suspicious. So I don't think he'll win it. I think one of the women will, either Penny Mordaunt or possibly Liz Truss, would be my bet. Both tend to be on the right wing of the party, and you might now start seeing a more aggressive move towards a proper Brexit, which means problems in Ireland. Again, it's a really tough call. I'm not sure there's a political tail risk involved in sterling at the moment. I'm not sure people have put that into the market. I think they're so fixated. You think of the pairs that sterling is the third in order after dollar, euro, sterling, and that people always look at dollar, euro first and then bother about sterling third. And I think that sterling's lagging a little bit. So I would want to be short of sterling against the dollar, surprise, surprise, and probably short of sterling against the euro, although I'm not so convinced on that.
Yeah, I mean, when you got the ECB and then on top of that, you're looking at the what's happening in the UK politically. It's kind of like, well, maybe there's some better options out there, and it's.
You tell me something though. How can you have inflation at 9% and it's more than 9%? Here, I go to the shops and it ain't 9%. It's higher than 9%. And you've got interest rates down at like 1.5%. It's just bonkers.
It's mad.
They should just come in and they should raise base rate by 2%, bang. And just, cut over and go, oh my God, what do we do now? We rein back on spending and stop it quickly, as opposed to this, we'll do another 0.25%. It's just, it ain't going to work.
Yeah, I think
that's quite negative.
Yeah. I was going to say that ripping off the Band-Aid would probably be the best thing to do, but it obviously hasn't happened. Just today, the Bank of Canada that raised rates a little bit more aggressively than the market thought, and maybe that might catch might start to price something more aggressive for the Bank of England and the ECB. But look, going back to the Bank of England, do you think that they can actually, as they're going through this transition politically, do you think it's possible that they would get more aggressive with rate hikes?
Well, the Bank of England is independent.
Of course they are.
It is, of course they are.
Yeah.
And they don't worry about their state pensions and their knighthoods and their peerages. They just worry about the state of the economy. I would like to say yes, they will, but I'd be a fibber if I said that, because I don't believe it.
All right. Well, it's going to be very interesting to see how it all plays out. Let me ask you this before we talk a little bit about Pardus FX. What's your best idea at the moment? What are you telling your clients, the corporate clients you work with over there? What's their best play right now?
To make sure you're hedged, just don't run a position. I think that there's so much volatility. We all love volatility, but there's so much volatility out there. You can see some real big whiplashy moves and wipe out your profits for the year. You're coming out of it, you're recovering from COVID, profits are tight, just cover your risk. Don't, there ain't no prizes for heroes out there. And that's my advice. Just don't be clever, just cover.
All right. Well, that makes a lot of sense. And for us, we're just kind of telling people, make sure you're trading a little smaller, manage your risk, keep your stops, keep your stops at realistic places, and make sure you have some stops in. But Dick, tell me a little bit of tell the viewers here. And by the way, if as you're listening to us on YouTube, or if you're watching us right on the Trader Summit site, make sure you give Richard a thumbs up for spending the time with us, and then also make sure you subscribe to the channel so you don't miss any of the exclusive content that we're going to have here on Trader Summit with Dick Matthews and ourselves, moving forward once again. But tell us a little bit about Pardus FX and what you all do over there.
Okay, I apologize. I'm looking after my sister-in-law's chihuahuas, which you probably just heard in the background.
That's okay.
Their views on the market. They said don't sell the dollar as well.
Very good.
Pardus FX is a new startup business with myself and Greg Bryce. Greg and I worked way back on the futures market when we were running bunds and Deutschmarks and Swissy and euros for Refco. We've always maintained a friendship, really, really good friends. Greg's been involved in commodities, done very well, and we were just chatting. He said, let's get the old team back together, keep an old man, off the streets, and give me something to do. So we got going a month ago. We've got a couple of young lads working with me. We've got a nice website. We're getting some good traction, which is interesting. And we're just doing plain vanilla deliverable FX. And that's what we do, and that's what it says on the tin. I don't want to get involved in doing anything fancy like options and whatever, because I just not convinced of the need of options for the corporate treasurer. And that's what we do. We're not allowed to give advice, but I've always got a view on the market, and I'm always happy to give that view.
All right. Well, I'm glad, Dick, that we're going to be here together talking about the markets more often. So I want to thank you on behalf of the Traders Summit community for spending your time with us today. And we're going to see you real soon.
Good to catch up. See you soon.
It is great to catch up. We'll see you soon.
Cheers now. Bye.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.